Hello, it's John Burford with TramlineTraders.com, and this is the first of a series of videos I will be issuing, setting on my website and also uploading to YouTube, I hope, if I can figure it out. So the first one I'm looking at is Nasdaq. This is the daily chart. It's updated as of today. So this is right up to the minute stuff. And I plan to analyze these markets as we go along using my Tramline methods. So I've decided on Nasdaq because it has been the most surprising to me and the leading stock index in the bear market rally. And I say bear market rally, even though a lot of people believe it's in a bull market, simply because of the classic definition of a bear market is when the market descends off a high, which this is the all-time high in November 2021. We have a series of lower highs, and lower lows. All these lows, all these lower lows, lower highs. That's a bear market, or a downtrend, at least a downtrend anyway. And I have placed wave one of what I assume will be a 5-wave decline here. This is the October low. After a 1 down, we normally get a 3 up to the wave 2, and this is my A wave. That's my B wave. And since the B wave low, I assumed that we're going to be going straight down in wave 3. That was totally wrong. I was blindsided by the support coming in principally from just a handful of high-tech, the big name high-tech shares, as investors have jumped on the artificial intelligence bandwagon and have pushed the indexes up to these incredible heights. So since that time, I have found it very difficult to analyze this period here. But what I will point out is this bar here. This is the A wave. That is a critical area of resistance. It's actually the Fibonacci 50% retrace of the entire move down from there to there. And I will say one of two things will happen. Either the market will push up above this resistance, in which case I will amend my bearish outlook, or it will fall short of this resistance here and start the wave 3 down from somewhere in here. Now notice that the rally was actually forecast a little bit by the momentum divergence down here at the lows. That's a new low. That's a new high in momentum. So that was understandable. But certainly the extent of the rally from here to up there has been totally flummoxing, if I may use that word, for yours truly. Okay, here's the daily chart. This is the final plunge off wave 5 to the wave 1 low down here in October. Now the wave pattern has been very difficult to analyze. My best guess is that this is the A wave, this is the B wave of an ABC, and this is the C wave of an ABC. That actually fits because a C wave is normally in a 5, and I can see that from this pattern here. That's wave 1, wave 2, long and strong, wave 3. This is wave 4, highly overlapping waves. That's typical. And the final push up, this will be the 5th wave of C. Now here is a very interesting line I've drawn here. It's connecting these points here, 1, 2, 3. Extend the line back, and that's another touch point, and this is another very important touch point. It is a prior pivot point. If you want to know what that means, you should go to my book, but that's a very significant point. So I consider that line as a very strong line of resistance. So here's my line in the sand right here. If the market can gather its loins and surge up above this line, it's got every chance of having a go at this critical level, 13,700. That's the 50% retrace, if you remember. And that would be a new bull market. I will be glad to concede the market's in a bull market. If it fails, if it does not reach above this line, which I believe is highly likely, it's partly based upon this momentum divergence here, then I think wave 3 down will start in earnest, and we could be looking at some fireworks pretty soon.